Let's focus in on this busy roster of central banks, data. What do you think has the power to surprise, Paul? Where are we going to see some volatility being created?
Yeah, hi there, Anna. Well, so lots of potential volatility in the FX and rate space this week. It all spins around or off of the Fed, of course. The Fed cutting last week, but then sort of signaling that it might be going on hold for a little bit of time. So that gives the market a time to calibrate where other central banks are going relative to the Fed. The Bank of England is coming along. The market is expecting a cut, although a close vote. And what we get in terms of the readout on how many more cuts there will be will give us close indication of where to trade sterling and gilts as well. That'll be quite interesting. And then we have the ECB the same day, likely to raise its forecasts and stay on hold, maybe, pointing towards a hike at some point in the future. So euro sterling also could look interesting on that metric. Then we get to, for Asia, the big one on Friday, the Bank of Japan. Everybody expects them to hike and to signal that more hikes will be coming as well. That hasn't been helping the yen so far, so maybe finally it will get a little bit of support if the BOJ can sound hawkish enough to convince people that the rates gap between Japan and the Fed is going to start to narrow a little bit more. So that's, I think, where we'll be focusing on and looking forwards to it at the end of the week.
OK, so a busy week for central banks ahead, Paul. But last week, at the end of it at least, seemed to be more dominated by the AI jitters than the Fed cut. I wonder what you see for stocks towards the end of the year. Lots hoping for a Santa rally. Are we going to see a great rotation?
Yeah, I think that's a really interesting one as well. On Friday, you certainly got a sense of that. And through the back end of last week in the US markets, this idea that people are pairing their Fed bets, pairing their tech bets that have been doing so well. Those worries about the build out, the pace and whether it's sustainable, the cost and whether they can fund it as well. And people thinking, well, why not let's spread our chips a little bit wider across the surface. So banks, for example, have been faring well, and other stocks that are more kind of offering more value at these rates. So I think that, at least into year end, the market's going to continue to toy with that theme. But I don't think that the tech story is dead by any means yet. The AI boom still has a lot of potential, and people will find more reasons to get excited about that into the new year.
So that's the busyness of the week ahead. We've already had some data, though, China data. We were just talking to a guest about that, Paul. What was your takeaway?
Yeah, well, pretty gloomy, and the market's taken a little bit of a knock there. We've also got some negative sentiment in the property space, of course, coming from Vanke, the latest of the developers to come under some fiscal duress there as well, struggling with its debts. So there's still clouds hanging over the economy. The market doesn't seem to mind all that much, though. Chinese equities have still been performing well on these growth stories, on China's tech story, as it happens, in the AI space there as well. So people looking a little bit more optimistically and favorably towards the Chinese market, despite these clouds, and hoping that in the new year we'll get more stimulus as well.